Good evening. This is Ken Long from Tortoise Capital Management. I want to take a quick look at the market health check, the daily summary, the daily tactical, and a couple of setups in the 551W pattern. A lot of bullish things happened today in the market. You can see that volatility, as measured by ATR, has pulled back to a relatively low posture. See ADX, which had dipped below 20 from a high of about 37, has now crossed back over 20, is starting to head north again with the bulls clearly in charge of the bears, green over red. And that's very positive for the generally bullish market that we've had. Now, you can see the narrowing of the gap between the 20-day moving average, which is this green line, and the 50-day moving average, which is the red line. The fact that they're narrowing is an indication that the strength of the bull is waning, which is not surprising, as we can also see that in the decline of the ADX. But the fact that the 20 stayed above the 50 and that price has rebounded from its test of the 50 is all positive for the market going forward. What remains to a very important support and resistance level is this 111, indicated by the purple line. It's broken through there a couple times, but hasn't really been able to hold above that. So I see us in this trading range at an extreme of 104, 104-ish down here at this lower red dotted line. Support at 107 and 108, and probably now at 109 starting to form. You can see right in here. I don't have a line for it yet, but that'll be there shortly. If we can see a close and hold and strength above 111, then that's very, very positive. You can see the oscillating nature of the MACD histogram over the last couple months or so. If it holds here, that's a very, very favorable sign. Moving on to the daily summary, we're in bull quiet mode. Today's little rebound puts us in the closer to overbought than oversold, with a 10-day index of 77, the annual index at 64. So we're becoming fairly valued here. Nothing remarkable in the gap stat other than to say that the standard deviation is still below 1%, which is a favorable sign, as the overnight gap has become less volatile, in addition to the rest of the market becoming less volatile. The 10-day max pain, looking at tomorrow for continuations in TRV travelers, old reliables CAT, Alcoa, and JP Morgan. No signals from the overreaction and channeling systems. Pivot at 111.05. So again, anything north of that 111 is really key. Volatility index has reduced to 12. You can see on a 30-day regression line slope that after this almost a 2 standard deviation pullback, it has found support above the red dotted line, which is a 0 line, for positive slope, and so it's found the ability to keep going here. That's favorable. There's room to run, essentially, is what we're saying there. But you can also see how as slope has declined and each wave of gains has declined in amplitude, that the market is not as volatile growth as it was before. You can see after the volatility spike of the sell-off of over the last 2 weeks, it has pulled back down into bull quiet once more. You can see ADX improving here with the bulls in charge. This is just a graphic representation of that difference between plus DI and minus DI. We've had quite a number of 551W patterns, and you're going to see a couple of them. I'm going to show you TRV, which is a trading favorite, and XLY, which is Consumer Staples ETF. The 3060 stealth candidates updated today. You can see there's quite a number of excellent trading targets in the ETFs and in the large caps as well. And so the plan would be tomorrow that any market momentum would be rewarded, especially if we see it in these candidates, because they're well postured to gain, and there's 2-to-1 upside to them just on a simple retest of the 10-day high. Moving over to the daily tactical then, this first group here sorts by the Dow 30 and by the 10-day index, and so we see Alcoa and Caterpillar were down big today, and they are maximum pain in 10-day and 3-day, and so that makes them excellent candidates for almost like an overreaction momentum move tomorrow if they reverse their trend. On the other end of the scale, AT&T and Verizon are likely candidates for continued momentum as well. And you can see them way over here on the right-hand side. They had extraordinary breakouts on the 10-day index, with Verizon coming in at 160, which means that they moved 60% higher than their recent 10-day trading range. So that's quite an extraordinary breakout. Over in the ETFs, the industrials, European index, Euro-Asia mix, Asia less Japan and emerging markets all did better than the U.S. today. They were leading candidates, while there was some profit-taking or slowdown in the commodity sectors, but even they were generally positive. So there's room for continued growth in those as well. Now I want to take a look in conclusion with two 551W patterns. The first one in XLY. So what we're looking for in 551 is the combination of a number of indicators that we know individually are favorable, and we just put them together, and then we look for momentum. So the first 5 is it's positive on a 5-week, so today's price is higher than it was 5 weeks ago. 5-day down, meaning that it's lower than the price 5 days ago. And then the 1 is that it's had a close higher than yesterday's high. And so we see the kinds of patterns that this finds is generally up from 5 weeks positive, with a measured pullback on a lower than the price 5 days ago, and then 1 day of momentum. And then the final thing is to make sure that we have a 2-to-1 on the upside. We're looking for Williams percent R below the -50 line, and that gives us the opportunity to target, in this case, 29.5 in XLY, and looks like about 54.5 in TRV. It's a little easier to see the 2-to-1 in TRV, and you can see there are well-defined swing lows at the bottom of the blue boxes, which represents the trading box that I'm looking for. So the 551 is a conservative opportunity to take advantage of continued market strength in the case of momentum for tomorrow. So that's Ken Long from Tortoise Capital with tonight's market update, and thanks a lot.